Hello and welcome. You tuned into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. And in this show, we will take you through all that happened in the markets. Snehi, not much of an action that happened in the markets. Another lackluster day of markets. In fact, we are pretty range bound right now. We closed within the previous session range on the Nifty and Nifty Bank both as well. If you look at Nifty, at one point we were down almost 0.6%, 155 points down, but we recovered from there. But nonetheless, we did not manage to breach the levels that we had crossed yesterday. In fact, we closed below the previous session's level. We recovered almost 133 points, but again, we turned into the red territory. Nifty closed absolutely flat. Nifty Bank also managed to recover. We recovered almost 215 points from the day's lows, but we again, slipped into the red. We were down 184 points on Nifty Bank as well. In fact, Nifty Bank also closed below the previous session's range. So very, very range-bound, directionless trade coming in there. As far as the broader markets are concerned, both mid-cap and small-cap also posted recovery. In fact, good recovery came in the mid-cap space because mid-cap space closed, though in the red, just down 0.2%. We were down more than that, through the day. Small caps, however, managed to recover 0.5%, less than the mid-caps. But there was carnage in, the broader markets. Small caps was down 1.5% in trade today. Bit of recovery coming in there, but nonetheless with cuts of 1.5%. If you look at a couple of names that were buzzing in trade, there was Bharti Airtel that was buzzing on the back of that big block deal coming in, where the promoter group has sold contingent investment has sold 51.1 million shares in the company. We also had ABB on the back of strong set of numbers coming in and brokerage notes. We also had Persistent System that was really pulling up the entire IT pack. Also, IT pack was really holding the fort also today. In trade, it was trading with gains of more than almost 1% in trade today. On the back of Persistence, a bullish brokerage note that came in by JP Morgan. They're maintaining an overweight on the counter, and they see a potential upside of 30% on the counter. Persistent System was up 4.7% in trade and also pulling the entire IT pack with it. Nifty Energy, Nifty Realty also marginally in the green. All the other sectors were trading in the red. So that's how the day largely shaped up.
Absolutely, in fact, lots to talk about what today's trading action has been. And like Ankita mentioned, we were range bound. We've seen some decent recovery coming in on the Nifty today, a 140 point uptick coming in from the day's lowest point. So that's how we've shut shop for the day. It's not all that good, but yet again, it's not all that bad if you take a look at Nifty on the intraday basis because of that recovery that we saw coming. Just a quick rundown on the sectoral moves. Like Ankita mentioned, FMCG, however, on the flip side was a top sectoral loser. IT on the top, you had FMCG. So it's interesting to see how two defensives are on either end of the spectrum, because one side you have IT, which is the biggest gainer. On the flip side, you have FMCG, which is the biggest loser in today's trading session. Radico and Balrampur led all the losses across the FMCG pack. Nifty Auto has extended its losses for the 7th consecutive session. M&M continues to be under pressure after its EV bookings did not meet street expectations yesterday. That stock was lower by 3 to 4% in yesterday's trade as well. Nifty Metal recovered more than 1.3% off the day's low. However, it has closed flat. So some good move seen across Nifty Metal, and Nifty Energy gains for the second consecutive session. NLC India and Thermax were your top gainers in that segment. But let's understand more of where we are headed when it comes to the markets, and for that, let's welcome on board Amar Singh, the Senior Vice President of Research at Angel One. Amar, hi, thanks so much for joining us on the show. Give us a sense of what we can expect to see in terms of level when it comes to the benchmarks, because every day we're seeing this lackluster move coming in, where in the first half we've slipped, or in the second half we've recovered, or it's the complete opposite, where in the first half we're holding up well, in the second half we've slipped. But nonetheless, we're not being able to cross this level on the Nifty that's proving to be a resistance on the top side. And to be precise, it's that 23,000 level is something that's seeming difficult right now for us to cross. Do you expect that in the coming days also, that now that we're inching closer to expiry on Thursday, do you believe that this is a week where we could cross those levels and perhaps inch closer to the 23,500 or so mark? Is that something that you're spotting on the charts soon for Nifty?
Yeah, I would say if we look at Nifty, definitely Nifty is trying to form a base. There's no doubt about it. And we did witness that if we go back slightly. So on 27 Jan, it had reached the 22,800 level. And from there, we had witnessed a significant recovery of almost 1,000 points. But then again, all the gains were given up, and Nifty breached that low also of 22,786. That was on 27 Jan. So that was yesterday. So having said that, what we see today is that there is a pullback. So it clearly shows that there's definitely buying interest which is coming in at lower levels. So 22,700, 800, that's acting as a very strong support zone. But at the same time, Nifty is also looking for fresh triggers because on one hand we have the FII selling relentlessly, and that's not showing any signs of stopping. But at the same time, there's not much of other negative news flows which are there. So markets have factored in most of that. And if you ask me about the level, I would say there's one level, you rightly said 23,000, it's a psychological level also. But 23,000, 23,050, that's going to be an immediate zone of resistance for Nifty. That's not very far from the current levels, 100 points, 70 to 100 points from here. Us breaching that level, then we could witness a 200, 300 point rally in Nifty towards 23,350, 23,400 level. So that could be where we could witness some sort of pressure. As far as looking at the charts from a short-term perspective, short-term, I would say charts are looking, I'll not say positive, but they are definitely indicating that markets are trying to form a bottom. However, the intermediate term trend, which I've been talking about for quite many months now, that continues to remain a cause of concern. So that effectively means is that at higher levels, Nifty is definitely going to find resistance. But if it manages to sustain above the 23,300, 400 zone, then we could see a 400, 500 point rally in Nifty. But that's it. On the higher levels again, it would be selling into, because if I look at the long-term charts, the trend has changed, clearly indicating that it's going to be toppy trading sessions, and it would be more of a stock-specific play in the markets.
All right, speaking of stock specific play, Amar, hi, this is Ankita also joining in. What are your picks going to be then? We saw a reversal coming in the IT pack also. It snapped its 7-session losing streak. That was buoyed by the sentiment for persistent system, of course, on the back of that bullish brokerage note coming in. But what are your picks? Are you seeing value in one of the counters from the IT pack? And what are going to be your plays for now?
Yeah, IT is definitely an area to be looked at because I see that that's going to benefit from two factors or two triggers. One is the depreciation of the rupee definitely helps the exporting companies, and IT is definitely a big player there. That's one. And secondly, there's likely to be some opportunities or increase in opportunities for the IT sector in the US. So I think that's going to definitely play an important role. So having said that, Tech Mahindra is one stock one can keep a close watch on. It has been consolidating. We've seen some sharp move also in the stock recently, and it has breached a crucial zone of resistance, which was earlier around 1680, 1700 level. So sustaining of the 1700 mark, the stock has the potential to rally towards the 1768, 1770 level. So that's one stock one can look at, and a stop loss of 1657. So this is one stock one can look at because what we are seeing is that the long-term trend continues to remain positive, and short-term we are seeing a trend change for the better. So sustaining above 1680, 1700 is important. That's a one stock. And the second is from the banking space, and that again is Kotak Mahindra Bank. See, if you look at Kotak Mahindra Bank, this has really, despite the market correction, the stock hasn't corrected much. But at the same time, if you look at from an investor perspective, from a long term, really hasn't gained much either. But now it's definitely showing some signs of bullish momentum. It is inching towards some important levels. Earlier, 1930, 1940 was acting as a zone of resistance. So that has been taken out. If I look at on the long term, some of the technical indicators have turned positive after a very long time. So that bodes well for Kotak Mahindra Bank. So this is one stock one can look at the current levels, and with a stop loss of 1925 and a target of 2020 on the upside.
Kotak Mahindra Bank are looking attractive to Amar right now. Amar, thanks so much for joining us, sharing your market outlook as well as your stock-specific picks. On that note, we'll let you go. But let's keep it going with word coming in from experts then. And Samit Vartak, CFA, CIO and partner at Stage One Investment Advisors LLP, shares a list of sectors he finds attractive amid the volatility. Let's go across and listen into his rationale and find out what he's liking amid a market that's so volatile.
I think the pockets, again, where I'm finding ideas are, into the specialty chemical space after a long time, they are getting cheaper with sort of the rupee going down, and there is obviously it went through a big correction, so valuations is in your favor. There is pharma space which is really looking good. Again, in this market, there has been correction. Gold finance looks pretty good. Home finance looks decently good. Luxury real estate, is looking good. And I continue to like, the building materials. Building materials, again, I think it's going to be a, really high growth time for a lot of niche building materials, like fabrication pies, electrical cables, conductors, a lot of even, transformers. So whether the, building materials are in the construction space or, power space, I really like the, power space. But again, it's all about which company are you going to pick.
All right, after the word from the wise, there's a steep correction that is led by multiple headwinds like slowing of corporate earnings growth, stretched valuations, and relentless FII selling. How should investors really approach the small and the mid-cap space? Is the froth really over there? Let's go across and listen in to some more voices coming in on that.
A lot of froth, in that market, in the smaller companies, where a lot of operators also got probably active, and then, a lot of the prices were active. But then again, if you're just looking for 15, 20 stocks, there are a lot of opportunities which are emerging, right? I mean, for me, it's all about what is your long-term returns goal. If you're targeting 20% plus returns goal, it's almost impossible to make that in the large caps, right? So the only way you can find 20% plus earnings growth companies is most often in the small and mid cap space.
Small cap and mid cap index growth, especially the small cap index earnings consensus growth, is still between 50 to 20%.
I clearly am a proponent of large cap stocks. In fact, in this correction, your certain large cap stocks have become quite attractive from valuation perspective as well. I think my sense of what has happened is, if you look at the setup, there's been a general movement towards US away from EMs, but within EMs, so far, whatever's come out against China hasn't been that bad as it was initially thought about.
Coming in across the board of experts on how you should be approaching the entire broader end of the market. But let's get stock specific now, and one stock in focus today was ABB India, because after rising by more than 5% in trade, ABB India did not only give up all its gains, it reversed all its gains, because at one point of the day it was trading with cuts of 6% after the management sounded a cautious note during their con call. It recovered quite a bit after that, because it has closed with cuts of only 2%. So recovery from the day's lowest point has happened for ABB India, but nonetheless, if you see the chart where it opened compared to where it has closed today, has been a massive fall. Let's take it across to my colleague Gaurav to understand what happened with the stock and what led to such a fall. Gaurav.
Well, yes, the stock actually opened in green, but now if we look at the stock performance, it is actually in red today. And the reason being that when we look at numbers, we saw a great story and great performance. Revenue increased almost by 22%. We saw EBITDA margins expanding almost by 440 basis points. But there was something in commentary which was actually a little pessimistic from the management. What they said is that better pricing environment is what they have seen in 2024. But at the same time, if you look at PAT, the PAT margin for Q4 CY24 stands at around 15.8% for the company. From going ahead, what management has indicated that this margin will be maintained somewhere in the range of 12 to 15%, which is actually lower than what we have seen for the stock already. That is one reason why we are seeing this fall. Another is that when we look at growth, now as per management, two factors which impacted the growth in this quarter. First was the major events like election, and at the same time slowdown in the capex from government side. And at the same time, if you look at the base for ABB India, base was actually high in terms of order book. But at the same time, UBS has highlighted that even if we consider the higher base, the growth is actually slower than what we have seen for peers. So that is another thing which is hurting the stock price right now. Lastly, even if we look at valuations and if we compare it with its peers like Siemens, Thermax and Cummins, ABB India currently have a price to equity ratio which is around 55 times, which is still higher than its peers, and that is the reason why we look at stock performance also. It is actually under pressure right now. So definitely certain reasons which are hurting the stock price, but all in all, definitely watching out on how the stock pans out in coming days.
All right, while that was a stock, ABB India, that was in focus today. There were a couple of other names like Star Cement, Karnataka Bank, Persist System that was in focus today. But what was really the story behind these stocks? Let's go across to my colleague Rabinder, who's standing by with all the details. Over to you, Rabinder.
Well, Star Cement is in focus, where company has successfully started operation of a 7 megawatt AQC boiler for its waste heat recovery system at its newly opened plant in Meghalaya, and this is a part of the total plant 12 megawatt WHRS of the plant. With this addition, the company now has a total operational waste heat recovery system capacity at 19 megawatt. Moving to next, Karnataka Bank were also in focus, where during its review of suspicious UPI global transaction, the bank found deficiencies in the reconciliation process with an estimated impact of rupees 18.6 crore, and the stock is down by over 2%. Moving to next, on back of brokerage note, persistence system were also in focus, where JP Morgan has maintained an overweight rating on persistence system with target price of rupees 7,200, seeing a 30% upside, and they recommend buying this dip considering its high quality growth compounder, and the company is expected to achieve a 21% revenue CAGR and 29% PAT CAGR over FY25 to 27, and the record high deal wins suggest high teens revenue growth in FY26, and the persistence has also set a new revenue target of $5 billion by FY31, which implies a strong 26% CAGR between FY27 to 31, and additionally margin expansion is likely due to lower subcontracting cost and improved operating leverage. And lastly, Tech Mahindra were also in focus, where CLSA has maintained an outperform rating on Tech Mahindra with target price of rupees 2030, where it remains their top peak in the large cap IT space, and they are confident that the company will achieve its FY27 EBIT margin target of 15% and expect revenue growth to outperform peers.
Okay, so that's a list of all the buzzers that were in focus in today's trading session. But let's also talk about another stock that was buzzing away amid a market that was sideways largely. That's NTPC, a 3% gain coming in on that stock in today's session, and conviction coming in from Nikhil Nigania as well, the director at Bernstein, because he said that they prefer NTPC in the renewable and transmission space. Let's go across and listen into his rationale.
From an investor standpoint, renewables. See, as a space, we find a bit expensive. Most of the stocks which are there. Renewable as business returns are usually early teens at best. It's not a very complex business. So hence, we have always preferred playing the sector by an NTPC, for example, which has a mix of both thermal and renewable to play. And on the thermal side, they have almost guaranteed returns in the cost plus business model. And even in terms of valuation, they are much cheaper than some of the private sector peers that we see. Again, while they've corrected from the top, but that's the name we choose as a top pick to play the mix of thermal plus renewable.
All right, with that, it's curtains down on this edition of Your Trades. Snehi and I will take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.